button, and we're gonna go live. Cold open, SNL style. We're live, just like that. Magic.
We're live. We're talking about Strazza's road trip. Strazza is driving from Key West to Georgia. It's one of those weird situations where the further north you go, the further south you get. You know.
Once you pass a certain line, where would you say that line is in South Florida, where that starts happening?
Once you pass Joe Robbie Stadium. It probably before that. Once you pass Hialeah, maybe.
Okay, you have a low line, my friend.
That is a low line.
Growing up in Miami, we never went north of Joe Robbie Stadium. That was as far north as we went, unless we were going to Disney World. Right?
You know, it's a big state, and I tend to love our Florida road trips. We stop along the way. We talked about our little Everglades trip the other day, so we're just checking out
a little alligator. Yeah, all perfectly normal things.
We're just checking out different towns, and we're going to the Georgia Tech Miami game Saturday with some friends. So
with Weitzel?
With Weitzel, yeah.
Very cool.
Good for you. So we got Katie Stockton on the show today. I love how we just did a cold open. No big deal. SNL style.
No big deal.
Well, I get it. We do the cold open because usually when Spencer has to hit the button to start the show, I'm talking about God knows what, and he's cutting me off. Like I can't finish my thoughts. He's always starting shows.
Yeah, God knows what is probably the best way to explain the things that come out of your mouth.
Anyway,
all right, should we roll?
Yeah. 305, baby.
All right, guys. So we are back here on the morning show. Nice little cold open there. JC showing his age with Joe Robbie. It's sacrilegious to call it anything else.
I went to Joe Robbie Stadium when I was just a young boy.
I don't know who that is.
Dolphins. Joe Robbie was the owner of the Miami Dolphins when they built the stadium in the early 80s. And then because of the shit show that is all things Florida, they changed the name like 200 times. And so, you know, we just go with the OG. You know?
Yeah.
Cool. I don't even know what it's called these days. Is it Hard Rock? I think it's Hard Rock, right?
How many stadiums and arenas get renamed after cryptos over the next 12 months?
Well, how many cryptos are there? There's not that many, right?
Oh, come on. What happened?
No, there's zero now.
Yeah, I don't think there are. Isn't there a crypto arena?
Well, there's
FTX
arena? There's FTX in Miami. That's no more. There's crypto.com in LA. LA has crypto.com.
Yeah.
All right. So there's one.
There's one.
There's got to be more. Their names are all over all the races and stuff. They sponsor everything. It's happening again.
Well, the races make sense because you're getting like that international shady money, you know, right?
And the major U.S. sports are not shady at all.
No, different kind of shady.
Oh, but think about where some of these races are taking place around the world. Like you want to be advertising crypto in these places. I mean, you know, right? I mean, are we going to split hairs here?
Crypto needs to team up with the Live Tour.
I want to get into the state of the markets, but I just want to start today's show with separating how I feel about other humans and other Americans and other earthlings for that matter versus my portfolio. So when it comes to my portfolio decisions, the things that I want to do, I don't care about any of those other people, right? So I know it sounds somewhat kind of like an asshole when I talk about how pessimistic people are and how sad and angry they are and consumer sentiment remains down in the dumps with the stock market making new all-time highs. So do I feel for some of those people that might be sad and down in the dumps and angry? Sure. I'm empathetic to them. Of course, I understand. Now, when it comes to my portfolio, boy, am I glad they're angry and sad and pessimistic. It couldn't be a better scenario. The longer these people stay angry and sad and pessimistic, the better it is for the rest of us that are long stocks. So stock market new all-time highs, most amount of new 52-week highs in the New York Stock Exchange in over 3 years yesterday. New all-time highs in the S&P 600 index, new all-time highs in the Dow Transports, new all-time highs in the Dow Industrials, S&P 500, NASDAQ 100. I can keep going. Yet despite all of that, the anger, the fear, and the pessimism rules. So fuck them. So that's how I wanted to start today. Little rant.
I saw a fundamental chart from the Wall Street Journal. Largest one-day gains in U.S. market cap. Yesterday was the 5th best day all time. 3 of those days were during COVID. So
a lot of so yesterday, a lot of best day since COVID, best whatever since COVID. It's one of those days.
Mm-hmm.
I have not seen. Granted, I didn't get through all the Slack last night. I was exhausted yesterday, dude. I was so tired. I went to sleep. So I didn't. I haven't gone through the breath charts. I asked for 2 charts. I wanted thrustiness in small caps, and I wanted thrustiness in smalls versus large. Does that chart exist yet?
Not an Optima.
Oh,
I can tell you right now.
I mean, just without even looking at the data.
Yeah, I can give you some fun
small
math.
cap, large cap ratio. What were you looking at? Basically like a 300 basis point spread there?
It was small's best day. I mean, small caps came close, and this is hard because it was really one of the best days ever. Small caps came close to some of their performances from March of 2020 yesterday. I'm looking at the Russell 2000. Now, you seem to be more interested in the actual ratio. Yeah, so you got COVID. There was huge
more interested. I would say equally as interested.
So just to talk about how material yesterday's single day move was, you have COVID. There were 2 days coming off of the pandemic lows where Russell 2000 was up more than 8%. Other than that, for a day better than yesterday for the Russell 2000, you actually have to go all the way back to the financial crisis lows. So the type of performance and momentum thrust that we saw yesterday in small cap stocks is actually something that's more characteristic of coming off market bottoms and the beginning of brand new uptrends than old late stage bull markets.
You're such a perma bear, Strazza. You'll see the crash is coming any day now.
Small cap stocks.
Those people, we need those people.
You could argue small caps, micro caps, they've been sideways for years. And this is a brand new uptrend.
Argue?
Yeah.
They have been sideways for years. What do you mean argue?
This is fine. This is a fresh reversal pattern. So we just shifted from a downtrend from 2022 to a sideways, neutral trend, consolidation phase to now new uptrend. It's just starting.
Can we do a little state of the markets, Mr. Israel?
We sure can.
All right, ladies and gentlemen, we are back. This is the post-election bull market. I hope it's been as good for you as it's been for me. I'm very much enjoying this. Nothing like a good squeeze, seriously. All right, so we got the Dow futures doing nothing this morning. 43,867, new all-time highs yesterday. S&P 500 kind of flat, up about 10 handles, just under 5,600. Excuse me. Just under 6,000 for the S&P 500, 5,600. Just under 6,000 for the S&P 500 futures. Wow. NASDAQ 100 futures leading the way up over 1/3%, almost hitting 21,000 for the Dow, for the NASDAQ 100 futures. 30-year bond futures are flat at 115. 10-year note futures are flat at 109. Crude oil pretty much flat at 71.5. Copper, 4%. Don't call it a comeback. $4.40 for copper. Gold up 0.5%, just under 2,700. Silver up a full percent, 31.65. With the volatility index absolutely collapsing. Had no business being in the 20s earlier this week to begin with. So this makes perfect sense. And we got the dollar down quite a bit this morning with the yen ripping, euro ripping, British pounds ripping across the board. And then over in funny money land, you've got Bitcoin down 1% and change, just 74,700. We've got Ethereum up 3% today at 2,800. We've got the Solana continuing to make serious moves. Last quote at 186 with the total crypto market cap. Mr. Spencer Israel, ready for this? 2.46 trillion with the BTC dominance at getting hit pretty hard today with that move in.
How high did we get the prior as far as crypto market cap before? Like
what?
was it like 2.5?
Well, it's been a lot of things.
We ever get to 2.5?
You want to know total crypto market cap?
Yeah, like what was the prior high?
So yesterday it did hit 2.5. Actually, overnight it hit 2.5.
No, I mean like months ago.
So the high in March was 2.7.
2.7. Ooh, all right. Wow, I forgot didn't realize it was that high.
Yeah, and the all-time high is 3 trillion, which was at the end of 21.
Yeah. All right.
All right, let's take a look at some charts. What do you say? Slide 3. If we don't start here, I mean,
You don't like my slide
doing?
too?
No.
I put that in there just now. All right, fine.
Spencer, your Federal Reserve is not my problem. You know what is my problem? The percentage of stocks on the New York Stock Exchange hitting new 52-week highs. Most we've seen in over 3 years. Spencer Israel, let me ask you a question. This kind of breadth expansion, does that normally happen at tops? Or is that just something you see throughout bull markets?
Not a top.
Yeah, not a top.
What I've learned.
Yeah, you tend to see breadth deterioration ahead of tops. You don't see the most amount of new 52-week highs in years at the top. So just further evidence that this is a bull market, in case you hadn't gotten the memo. Another thing, so there were 2 charts that to me have been a big part of the bull case. Go to the next one, Spencer. And that is, the question that I ask is this bull market, we're now in year 3 of this bull market, is this bull market going to end without the small cap index breaking out of this base? Are we just going to have an entire bull market without small caps breaking out?
I've lost count of the number of times you have asked this question. You've asked it like once a week for I don't even know how long at this point.
Well, as it turns out, that was a great question to be asking because here we are making new all-time highs. So with that in mind, if the question was, is the bull market going to end without small caps breaking out? The answer was no. So good that we were asking the question. Now here's the next question. Is the bull market going to end with the S&P 600 index only making one new high?
Well, a wise ass would say, okay, it broke out. You got it. You got your highs. Good. Now end. Over.
Yeah. Probably not. For those of us who studied history, I encourage everyone to go back and count prior bull markets, understand how they behave. The probability is not going to be that the small cap index makes one new high. Chances are that this is the first of many new highs, and I can make the exact same argument, everything I just said, for the transports. You want to throw that up? Ladies and gentlemen, may I present you trannies, new all-time highs. Finally, here we are. So small caps and trannies made new all-time highs on the same day. And again, the question was, is this bull market going to end without the trannies breaking out? And my argument was like, that's a tough bet to make. I probably don't want to do that. And now here we are making new all-time highs. So I ask you the same question. Is this bull market going to come to an end with transports only making one new high? Or is this just the first of many to come?
I don't know, but of all the charts you just showed, the first chart is the most interesting to me, right? Because I don't know like the historical, you're asking if these indexes are going to only make one all-time high or more, and I honestly don't know the answer to how that's played out in the past, but I do know a little bit more about breadth thanks to you guys. So that's the one that probably is the most important of these 3 to me. Am I wrong?
You're not wrong, but it's almost like the same. I don't want to say it's the same thing, but they're all together, right? Why do you think we had the most amount of new 52-week highs in the New York Stock Exchange that we've seen in 3 years? Transports and small caps breaking out probably doesn't hurt that, right?
Yeah, well, that's yeah. Okay,
I mean,
you're
right. Yeah, I mean, just to clear the air, the Dow transports have been the trannies for way longer than these weirdos started cutting off their penises. Like this has been on Wall Street for a long time. Like the fact that these weirdos want to do those things is not my problem. Like knock yourself out, cut it off. I don't care.
That's true. These trannies were here first. Yeah.
Yeah. The trannies were here first. So sorry. Again, do it. Knock yourself out. Cut it off. Lorena Bobbitt, that shit. Knock yourself out.
You're really dating yourself there, JC.
I'm dating what year
was
really
dating
Bobbitt?
yourself with that one?
80s or early 90s?
That was like 30 years ago, man.
No, but they're really coming for the trannies. Like I used to be able to type in DJT into all my trading platforms and pull up the Dow transports. Now it's Trump Media.
I know.
Like,
It's like the when I try to type in Deutsche Bank and I get butter futures. Like I'm not trying to. I don't care about your New Zealand butter futures, bro.
Yeah. I miss Credit Suisse.
I definitely do not. I'm surprised it lasted that long. Okay, I got another one for you. Next chart, Mr. Israel.
Mr. DePablos.
So I keep being told that the consumer can't afford anything. Consumer's dead, JC. Nobody can afford anything. How about the world's largest retailer breaking out of a multi-year base to new all-time highs?
I think both those things can be true.
I don't think so.
Yes.
I don't think so. And then my favorite argument, right, is that these yahoos, they come to me and they're like, "Oh, JC, but it's a tech company, AWS. It's not the consumer," right? You hear that one? That's a good one. Next chart, please, Mr. Israel.
No one's buying a house or a car or a washer and dryer on Amazon.
Let me ask you this, there, Mr. Israel. This dead consumer that can't afford anything, and this Amazon with the AWS. Does Walmart have all that AWS revenue also, or no?
No, man. Walmart has staples that people need.
Oh yeah. So according to Jeff Mackey, who is the son of the former CEO of Target, the guy who built Target, so he knows Target pretty well. He says that the business of Walmart and the business of Target are 99% exactly the same, but Target is considered a consumer discretionary, and Walmart is considered a staple. So how do you answer that? Are you going to fight with Mr. Mackey?
Yeah, I remember when he said that. That gave me pause. I don't quite understand, honestly, because we should have asked him, because the cloud revenue is like a big deal. Amazon's they're more of a conglomerate than Walmart, right?
Seems to me here that the AWS aspect of Amazon may be the thing holding it back. If it was more consumer oriented like a Walmart, it'd be doing better.
No, come on. No.
JC.
No? Am I reaching?
Yes.
Stop. They've both been great stocks.
Mackey tells me that you want to ignore what the economists say, forget all that government data. They're lying to you. If you want to know how the consumer's doing, you look at Amazon and Walmart. That's what Mackey told me.
I think there's some truth to that.
I trust him with my life, dude.
Yeah, there's certainly some truth to that, sure.
What's your point, though?
My point is that in a bull market, consumer discretionary stocks should do well, and the largest retailer on the planet just broke out of a 3-year base to new all-time highs. Probably not bearish.
Yeah, I'm on board.
But the fact that these idiots are telling me that the consumer can't afford anything every day, every time I bring up an Amazon chart, to me is like bullish. It's like all these angry, pessimistic people in the consumer sentiment data with the stock market at all-time highs. Like, that's a good thing.
There's
right?
a lot
Not for them, but for us, it's a good thing.
There's a lot of really positive and bullish takes about the consumer out there right now as well. This isn't.
I really like what Mackey said. Just follow these two companies, and that's all you need to know. And Costco, he said too. Costco's the third. You follow Costco, Amazon, and Walmart. That's all you need to know.
Yeah, you could just go outside. Leave your house every now and then. You get a good feel and good vibe of how the consumer's doing in different areas. Economy's been fine. Economy's been great. Did you guys read that? What was it? The Economist piece about the U.S. economy? The one with the.
I definitely read it cover to cover.
I'm going to stop you there.
What?
Definitely read it.
Did I read the Economist piece? No. Sorry.
It was actually great, and it talked about just like how badass the U.S. economy is. And they were like myth busting a lot of it. Like they were saying, like, if you think this is bad, average income of $85,000 and an unemployment rate of whatever it is, like record lows. It's like, America's amazing. So there needs to be more takes like that and less takes like whoever these people that JC is listening to and hearing from about the consumer. Because we're doing great. Doing good out here.
Dude, I was on a Spaces the other night when these libs were losing their minds when the Harris got smoked. And they're like, "Oh, well, why are interest rates going up?" I'm like, "Well, maybe because the world's never been a better place. So why wouldn't interest rates going up?" Dude, these people were losing their minds, bro. The fact that I would suggest that the world has never been a better place, like they can't handle that kind of optimism.
I mean,
a lot of the feeling on this is tied to it's feelings, right? It's feelings over facts. It's your personal experience, and that's how people just equate their experience to reality. So if your experience is that things are great, then things are great, and if it's not, then they're not, right? I mean, that's kind of people just project there, and that's kind of how the economy is. It's a projection of your own personal experience. But some things are more affordable than ever, right? TVs never been cheaper, right? Never been cheaper to get a great TV, right? Awesome. College never been more expensive.
Caviar never been more expensive.
Houses never been more expensive. Actually,
Strazza, tell us about the caviar.
Bit,
it's up there, is it not?
It's good value. You're paying about $100 for a little. What is it? It's an ounce, right? Or gram? What is it? The little.
I don't know. I'm not good with that kind of stuff. It's like a little can.
Yeah.
It goes fast.
I turned on Fox News this morning, which I almost never do, but I was just interested because you would imagine, like, could this have gone better for the Republicans? Like, it was kind of shocking. It was absolute slaughter, right? Now they have the House and the Senate. Like, I don't think it could have gone better. So I turned on Fox News. These people are absolutely giddy. And I get it.
Of course, but think about it like this. Like, just in general, just forget Fox News, just all of them. Like, in case you haven't been paying attention, like all of us finally learned in 2008 after the great financial crisis that the media is there lying to you. They were prancing around all these analysts the whole time. Like, they were lying to you. And we all know that. That was the beginning of the blogosphere, FinTwit, as you know it today. That was the genesis of it all. But most Americans and most Earthlings do not live like in our echo chamber. So a lot of these people actually still thought that the people on TV were not lying to them, that they were actually telling them the truth. This is just a great example of it goes beyond finance. Like, obviously in financial news networks, they're all lying to you. We know that. But in the regular news networks, it's just as bad, maybe worse. Like, these people were telling you how close the election was and like, oh my God, it could go either way. Man, it couldn't have been further from the truth. They were lying to you. And I also love the, the poly market. Poly market is going on some victory lap situation here.
So I
actually took a snap. You ready for this?
I listened to the CEO on an interview on one of the networks this morning.
Hold on, listen to this. North Carolina, poly market was at 95% at 9:30. It wasn't called till 11:30. Arizona at 10. As of this, it still hadn't been called. Georgia at 10:30. They didn't announce it till 1 a.m. Wisconsin at 11. They didn't announce it till 5 a.m. Yeah. The overall winner at 11:45. They didn't announce it till the next morning. I mean, just terrible people lying to their audience.
Well,
and here's the thing: Poly Market extra nailed it. They were right the whole time, right? They had Trump in pretty decent lead.
And I'm not gonna lie. I was rooting for Poly Market to be right because I wanted the data for the future, and if it was for guys manipulating the market behind closed doors, like, that would have sucked for everybody else. So I was like rooting for Poly Market, obviously. Liberal or Republican, it doesn't even matter. I just wanted their data to be the best data, and as it turns out, it was.
Why aren't you giving credit to the market, just the regular markets? Because they were right too.
I am, but we give them enough credit.
They're always great.
They're always great.
Okay.
Yeah.
Sure.
Poly Market proved great. Financial media, just media in general, proved worse than ever.
The market nailed it, but there was uncertainty in the final hour. The market absolutely nailed it. But guess what? Regional banks did not break out ahead of the election. They waited and then raged yesterday. So there was some uncertainty there in the market, or else that range in regional banks would have resolved.
All right, so I want to talk about China, but we got Kenny here. We got Katie Stockton in the house, so we got a lot of people to talk to. And then after that, then we'll come in. Jon Najarian in the house coming today too?
That's what you told me. I haven't I haven't heard from him, but he has the link, so I hope he joins.
All right,
let's bring on Kenny. Let's bring on Kenny.
All right.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Mr. Kenny Glick, how are you, my friend?
I'm McLovin. What's going on? How are you?
Are you McLovin or are you App-lovin?
I'm App-lovin. Yeah, do you guys talk about it
yet? Who is an App-lovin these days?
Right.
No Faderoo yesterday.
No, listen, before we even get started, man, I mean, when you know when to hold them and know when to fold them. When you get a power gap, that's what yesterday was. And I think I told you, maybe sell some Humana because that stock tends to fade, but the rest we just held on. And actually, I dipped my toe into the QQQ short a couple more times because I have an addiction problem. Basically 0 for 4. But just went back to the Palantir and the ARM and the A-Lab. The A-Lab, I don't know what that was this in the morning, but it was one of the only stocks that they got was down, and then it just provided a great opportunity. If you guys are looking at A-Lab yesterday, the follow through on the earnings report, it looks like they just had to get a seller out of the way at the open, destroyed this guy, and next thing you know, you got back above that chop and off to the races once it got over the prior day VWAP. That was a really nice trade for us. But yeah, power gaps, you just don't short them. Yesterday was like the shock to the system where if you didn't buy something, you were late. And it just sat there waiting for you to buy and just crushing shorts and grinding them to death. It was something.
I will say though, Kenny, as long as I was going into this event, and we did not hedge at all like some others here internally, I did honestly just assume that we would get some kind of pullback yesterday. Maybe they came in and buy, maybe not. We didn't get any. So now we got a FOMC later today. Maybe that gives us the pullback. Maybe not. So, as somebody who keeps an open mind and just takes the data as it comes in, because obviously I don't know what's going to happen next. I got to tell you, pretty impressive, the lack of correction.
Yeah. You know what? The funny thing is it was only isolated to the Trump stock. The Trump stock, obviously came back in and actually
like the DJT specifically, but not like Geo or Tesla or any of these. Like Geo went out of the highs.
I thought maybe Goldman Sachs would pull in, and it was about to fade. And next thing you know, it went up 20 points. Another 20 points. Is Goldman Sachs
a Trump stock?
What?
Is Goldman Sachs a Trump stock?
No, it was just a bank, though. Everything was so gapped up. I was just looking to short something on a pullback, but there really wasn't an opportunity. And, again, we did find one. Carvana did pull back, and, it cooperated with some VWAP trades and did get to blue line to the orange line, and, back to exactly where it pivoted from in the, the prior day. So there was something to do yesterday, but really it was just holding on to Palantir. The old adage, 47.50 get you 50, 52.50, then 55. At 55, we said, all right, let's sell some here. Same thing with the A-Lab headed to 100, and the Reddit was just ripping back. I mean, there was so much yet not much going on. You know what I'm saying? It was just like you just had to stick with what was moving, and it just was just grinding higher. You could feel the algorithmic accumulation just grinding higher, and we just held the cues and held the pound.
Steady Eddie.
Yeah. So, I mean, I think I still, again, we keep talking about how things are priced in. This interest rate announcement's priced in. I'm not even going to be here. I don't care. I'm leaving. So I'm not even going to be here. That's how disinterested
Where you going? You playing pickleball with Gladys?
No, today is a big Grateful Dead event. We got our own private concert. My friends, it's called Wall Street Dead Ahead. If anyone's into the dead and wants to join our group, we're about 2,000 strong nationwide, mostly out of New York. Just bankers,
Anybody I know? Like what? Mark Newton, John Malloy.
Newton's in it. Yeah, Newton's in it. You got Leisman's been to one of our events.
Leisman, sure.
Yeah. So yeah, it's a good time. Today we got a little concert. Sometimes what's his name shows up from the E Street Band. Oh, don't that guy. He was there. Yeah. And Keith Sherrard and Tosh Neal. So the guys from
where is it?
Yeah, so we have a little
Where?
By Horn Resnick, Midtown, and then I'm going out for my birthday. So don't expect me tomorrow morning. I'm telling you right now.
Oh, excuse me. Give us one more, Kenny. What's on the move this morning?
Elf. The Elf on the shelf is falling off the shelf. So I don't know what this is. I heard it's the Ulta of somewhere else, but massive move in the aftermarket yesterday. It's a low volume play this morning, but you did break VWAP, and the shorters are, you're getting that little fade here. So I'm looking to see if this thing continues. It might give it Jerry or back. So watching this one, as well as Lyft. It's just sitting here hovering. I shorted it, and I'm still short. And it's just stopped moving. So again, tight little area right here. If it gets over that 1780, I'm getting out. But if it rolls over, again, I'm looking for 1750. If 1750 doesn't break, maybe get a pull back to 17. So Lyft and Elf, and obviously ARM, any chip stock that is gap down. This one is already paid. Again, there's the VWAP, there's the faux show, bro. So nice trade on the ARM. just got out of 40, and that's about it. Sticking with those names.
The kids these days, they don't know what the elf on the shelf is. Spencer and Strazza, I'm pretty sure have no idea.
We got
Hey,
Lynch on the bench here too.
100%. I know what Elf on the Shelf is.
Do you? Isn't that like a thing? I just learned about it a few years ago when I started having kids.
Yeah,
Is that like a thing for a long time?
It's been a thing for a while.
Was I deprived as a child because I did not have an elf on any of my shelves?
No, I didn't have one either, but my cousin did, and so she gave it to us to
so much fun.
It is a little bit fun. I like hang them from the chandeliers and all kinds of stuff. It's kind of fun, actually.
Yeah.
The crazy thing is the delusion that the kids, I don't want to break the secret anyway. They really think that things coming back and forth. They're looking for it in the morning. It's kind of weird and creepy. We had it on the stairs waiting for my kid one time. Like, so funny.
No, my wife she looks online at all these creative things.
Oh
and
my God. It's so much fun.
She creates like bubble baths with like little marshmallows and the elf is hanging out in the bubble.
Yeah. It's pretty funny. But hey, listen, to my friend over there, why do I look for shorts? I look for any trade that sets up, but I'm looking for gap fading on a day like that. I tried my luck fading the market, but again, there wasn't. Most of the day we stayed long, my friend. Don't worry. We know what we're doing. But, again, Palantir and then, the A-Lab trade. So I'm just responding to a comment I just saw go by. But to me, the fade is where the action is. Usually you'll get some profit taking on a big day like that. And we stayed focused on a couple of names, but yeah, I'm just going where the action is. But right now, the QQQ still long. I'm not selling this thing, and there's really no reason to sell. So I think we're going to 525 easy, maybe even by Friday, by tomorrow night. Once we get past this interest rates, I don't know. I'm looking at 550 calls now for Christmas. It's insane, but that's where we're probably going to go.
You're the man, Mr. Kenny. Good luck tonight. Happy birthday. Enjoy it. And I will see you on Monday.
All right. Good luck, everybody. Later.
Adios. Oh, Mr. Kenny Glick. Never a dull moment. There's a lot of like Steve Leisman. Dude, Steve Leisman can rock out. Dude, he wears his Bermuda shorts and his Jerusalem cruisers, and he's just kind of like playing the Grateful Dead. Like, dude's a rock star. And then like the next day, he's like interviewing like a Fed, chairman. Like,
yeah, I'm sure he's got a busy day ahead.
Mad respect.
Because he cares about the Federal Reserve, unlike some people that I know.
Your Federal Reserve is not my problem, Spencer. You know who I'd rather listen to than the Federal Reserve? Katie Stockton. Katie Stockton, she knows her stuff. That's who I want to listen to, not the Fed.
That was a good segue. Let's bring Katie on.
See what I did there?
Yeah, that was very good.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
It's nice show you got going here.
What's up, Katie? How are you?
Hey, JC. Good to see you.
Likewise. Just having a little fun this morning. It's a bull market,
like
Katie.
You
gotta enjoy it.
Markets are more fun, aren't they?
They are. I've quantified this quite a bit over the years, and in bull markets, the parties are better and they're more frequent. Like that is just
true. I mean, having sort of grown up in the business in the late 90s in San Francisco, that was pretty fun. We had, the launch parties every weekend, those were the days, right?
100%. And think about it. In bear markets, cash bars, no free sushi, you're driving yourself there. Like now we're taking party buses to random birthday parties on a Thursday.
There you go.
I'm getting invited to all kinds of dinners. Like these are bull market things, Katie. Like joking aside, like for real though.
Yeah, no, it's true. There's so many market moving events this week, huh? It's been really interesting. I was laughing when you're talking about the Fed. I do know it's a Fed day, so there's that. But I'm not letting it guide my decision making.
It's almost like you've learned over the years that that's probably a bad idea.
People are always asking how you're positioning through these events, and I just say I'm not, because honestly, it's really hard to have an edge, like right at an earnings report, right at certainly a presidential election, and at a Fed meeting. I mean, we have really no way to predict exactly how the market will react. So I'm a bit more passive in my approach, or reactive. I'd like to see how things trade on the back of these big events. and just absorb it. Our discipline, as I think we've probably discussed before, it's like it's always waiting for confirmation. We always want to make sure a big move holds, and that definitely applies to yesterday.
I love the fact that you brought a lot of charts, Katie. You can't help yourself. You're like me. Somebody asked for 3 charts. I sent them 20. And I before we get into some of these charts, I just want to hear your thoughts on just the last couple of days. Small cap 600 index, new all-time highs. Transports, new all-time highs. Most amount of stocks on the New York Stock Exchange hitting new 52-week highs in over 3 years.
Yeah, saw that.
Thoughts on that on the last few days?
I mean, listen, like we're a bit more neutral in our takeaway. Again, taking that sort of wait and see approach. I would say that there are indications that yesterday has some exhaustion to it. We always talk about selling climaxes. Well, there's such a thing as a buying climax too. And when you do see the market internals, like the percentage of stocks at new highs, that type of thing, reach these extremes, usually it's a bit of a contrarian indication. So we're not chasing the rally, but listen, if the small cap indices can hold on to these gains for like until maybe the end of next week, we're going to feel pretty good about that breakout. So it's more a matter of just like letting the market settle out, seeing if the gaps from yesterday get sort of dipped back into, because if that happens, I think that's a setback, and it's really easy for folks to watch at home, like the S&P 500 cash, look at yesterday's low around 58.65. If we dip below that in the next, say, 3, 4, 5 days, that to me would suggest that not only the gap fills, but also would be associated, I think, with more prolonged consolidation. So
Exhaustion.
Exhaustion. So more inclined not to chase and let things kind of settle in.
I agree wholeheartedly with that. If you get that exhaustion gap, if you will. Funny, I gave a presentation yesterday on pattern recognition, and I was talking about breakaway gaps, exhaustion gaps. So it's like
and it's
top of mind.
Well, the key there is like, where did the gap occur, right? Did it occur after like a corrective phase? I would argue no, right? Like the people are saying, well, this is a breakout. It's not really a breakout unless you had, a real resistance level there. So yes, for the small cap indices, you could construe it as such. We're always looking at the DeMark indicators, as you know, as well. And we have some really interesting signals that popped up this week on the daily chart. So we have a counter trend indication from 10-year treasury yields in the dollar. Not that those correlations are exactly making a whole lot of sense right now, but they are what they are. So we think those moves are overdone. It's pretty much an easy takeaway, I think, at this point. But then also we have in the small cap Russell 2000 index, the first short-term DeMark counter trend sell signal since July of 23. And that was a very timely signal. So it just, it's not like we're rushing out to sell everything on that, but we are more inclined, I'd say, to wait to make sure this is a real breakout.
What about, part of the reason that we were so bullish going into this election, a lot of reasons, the bull market. So usually in bull markets, investors that own stocks are rewarded for that sort of behavior. But aside from that, put call ratio making new 52-week highs on Monday, VIX 22, 23 with the market at all-time highs. Like that seemed a little off balance. And boy, did that correct real quick. Can you talk about a little bit of that positioning coming into the election and how quickly that unwound? And does that mean anything to you at all?
Yeah, and we were watching the VIX too, and it's in part why we were expecting a rally around the election. We're more neutral in our sort of bias right now because we have these DeMark indications on a very long-term basis, but constructive around the election in part because the VIX had gotten short-term overbought, looking at something like a stochastic oscillator, but then also had a DeMark indication that it was overdone. So believe me, it was a bit more of a dramatic move down that I would not have anticipated. But the VIX came right back down to its 200-day moving average, where it's basically testing right now. And so it was a pretty interesting and the sort of immediate reaction to that oversold overbought indication. Now, very quickly, we have the reverse of that, as we test support. So the market, I think, was teed up for a rally and kind of irrespective of the outcome of the election, as long as there was an outcome, right? I do believe that there needed to be
that's a good point. That's a good point, Katie.
Yeah, decisive takeaway. What's kind of different this time in terms of the election, I mean, I'm sure you and I both have had conversations about how markets trade on the back of these elections. And we don't have, in recent history, going back 25 years or so, we don't have a good example of this type of market environment coming into the election, because we'd almost always, outside of the bear market cycles, 2000, 2008, we had corrective phases that were pretty significant going into elections, right? So therein was that whole idea that the markets don't like the uncertainty. But we didn't have that this time, which is really kind of strange, because I would argue that there seemed to be a whole lot of uncertainty right up against the election. And then the removal of that uncertainty would be like, a positive thing. So it's strange that it didn't really trade off. And then it's also a little strange if you try to reconcile the action in the US with everywhere else. I don't know if you've looked at Europe or Japan recently, but
China.
Boy, yeah, well, China, I treat China a little bit differently than the, developed global markets, with less of a comp, but, certainly interesting long-term in my opinion. But, with the weakness that we've had in Europe and Japan, it's like people are just, really rewarding US. And I know that that's usually the case in relative terms, but it's been really pronounced. They've really diverged in absolute terms lately. And I think it's something to watch.
Katie, I got to tell you, and I know you brought some charts, but I'm going to be very selfish here. We got Katie Stockton in the house. I'm going to ask you the questions that if you and I were hanging out at dinner, I'd be asking you the same questions. So we'll get to the charts right now. Last one, I promise. So The Economist magazine, one of my favorites, right? Because not only is it journalists, but it's journalists trying to be economists, right? So you get the double whammy. So that's why I particularly like that one as a contrarian indicator, not to mention pretty fantastic track record over the years. So as you just alluded to, the S&P 500 in the United States has been outperforming global assets, developed markets, and emerging markets for 15 years, whatever the number is, a long time. Now The Economist is telling us that the United States is the envy of the whole world, and that's not going to change anytime soon, and the U.S. outperformance is here to stay. Yeah, I don't know, Katie. I don't know. I don't think it's that simple.
That's interesting. Yeah, I mean, it always makes you pay attention, and I have to say I'm kind of bullish on Boeing, so I'm not opposed to these counter trends or contrarian types of indications either, but it is hard to fight that trend, the relative trend at least. But what you could argue is that there will be a point, and we're not there yet on the charts, as you know, but where all of a sudden we're going to look at Europe and Japan, and they're going to look a lot more oversold in absolute terms. And then we'll look at the S&P, and it probably just won't be there. So maybe you have a phase of outperformance from them once they get more oversold on an intermediate term basis. So kind of an interesting point. We want to trust the long-term trends, but it definitely has you paying attention. Have you seen any headlines like that for the small caps versus large caps too?
Not quite. And I don't trust people as much as I do The Economist, to be wrong. The Economist really takes the cake here. I mean, look at this one. You got a dollar bill, like a rocket ship, the envy of the world. And then throw up the next chart there, Mr. Israel, if you will. This is the one that gets me. So like now is when this comes out, right? Not 15 years ago. You get it now.
Yeah.
Right now, obviously, Katie, we're not just going to randomly buy and sell stocks because of what some journalists parading as economists might think. We got to see it in price, and we haven't seen anything in price. But, and this is why I wanted to ask you about China. Trump wins. The market was already pricing in a Trump victory. We were already seeing it. So I was already going into the election with a Trump victory in mind. And then I'm thinking, well, everybody just assumes that a Trump victory is going to be terrible for China, right? So you got The Economist telling us that this outperformance is going to last. You've got everybody assuming a Trump victory is going to be bad for China. They knocked down China immediately after the Trump victory, obviously, as we saw. So my thought is, do they come in and buy them? Do they come in and buy the dip? Because if they do come in and buy the dip, I will be doing the same thing. And you got the CSI 300 today up 4%.
Yeah, and it really wasn't that bad in China yesterday. I'm looking at my charts now, but It was like more just like a retracement of the previous day. You've got such volatility there. So it wasn't any kind of breakdown or anything of that nature. I think the China case to be made is one that's long term, because if you take a step back and look at the monthly bar charts in China, you see like what a very classic sort of rounded base or inverse head and shoulders type of setup in some of these indices. So that's what's compelling to us. In terms of timing the entries, that's more difficult, but I don't think we're quite there yet in terms of like our overbought, oversold metrics. Once it's oversold, at least from like the weekly stochastic perspective, we'd be more interested in that, because you know how it can go, right? The retracements can be really dramatic there, especially because we're talking about something that is a longer term turnaround. And they're in, you know, a little higher risk and lower probability. But I think it's, you know, definitely an area that we want to add exposure to. We're just not quite there yet. What's interesting about your Economist cover, it's the dollar, right? And you know, you could also
They just used the dollar. They weren't referencing the dollar.
Okay, because I was going to say, I mean, the dollar has had quite the you know, acceleration to that.
They don't know the difference, Katie. They just assume that it's the dollar's part of it. What about the momentum thrust that we saw in China over the last couple of months, where you had the biggest moves in the history of Chinese equities? And as we've studied the past, these sorts of momentum thrusts historically don't happen at the end of bull markets, but you know, early on in trends. We've never seen anything like that in China. So again, we're not long China. I mean, I guess we have a little bit of China, but not like what I plan on being if this thesis plays out. But those are the things that are on my mind.
Yeah, and I think they should be. So with any kind of like thrust, right? We just going back to that discipline of making sure things are confirmed. We did see confirmation from the Chinese benchmark. So we saw, you know, at least 2 weekly closes above key resistance levels. So it was sustained enough to suggest that it is real. And you're right, that first move off the bottom is often the biggest, right? But it does usually mark the start of something, not the end of something. So I'm really compelled by it as well. I mean, if you look at the Shanghai Composite on a monthly, it looks like a big double bottom formation. So I am intrigued by it. We still, in our work, tend to favor things that are in long-term uptrends, right? As opposed to just the turnarounds. But there's some real upside potential typically in turnarounds if you can stomach the risk.
Yeah, the setups are there. Price needs to confirm, but there's a lot of things that are at the very least pointing to maybe pay a little closer attention to China. That's all. Okay, I'm going to stop being selfish here. Listen, you got to be a little selfish.
I don't know what charts I sent you. That was probably my people who sent them. So we'll look at them together.
Katie, your people were talking to my people. You know, it was fine. It was fine. Let's go through it. We're looking at the S&P 500, kind of a big deal. New all-time highs.
Yep. So, and you see the cloud on that chart. I know it's probably a little hard for some folks.
Here, zoom in on there. You can zoom in. We have the technology.
Okay. Yeah. So the shaded area on the chart is the cloud, and the cloud shows, you know, it reveals the cyclical bull trend, of course. And we know that it's within a secular bull trend as well. So we're watching both former resistance and the cloud as initial support, 56.70. That obviously is intact right now. We have a measured move from an earlier breakout that was pretty much in line. So 59.35. We're trading right now around 59.30, right? So we have this measured move objective having been met. The momentum isn't great, as you can see in part on that daily MACD indicator, but we do have the short-term oversold uptrend that was, you know, right ahead of the election. So we could squeeze a little bit more out of this is the message. And then we would maybe expect it to give way to consolidation that could be prolonged looking at those momentum gauges.
All right, so you brought some charts of some individual equities. We got Boeing and Fortive. We've got Coca-Cola and Eli Lilly, and then Charter Communications and Interpublic Group. I'm curious why you put these two together, or it's just
so we're just looking for like bullish and bearish setups, right? And that have some variety to them from a technical perspective. And you can find setups on both sides of the market right now that are pretty interesting. Boeing, you can see as wholly a counter trend trade supported by the DeMark indicators there, and just simply look at the distance to resistance. I think it's pretty, interesting, albeit potentially a little early. The forward chart you can see is more of a bearish setup. It looks kind of head and shoulders-y. That breakdown below the cloud and then the subsequent failure to get back above it, that's usually a great time to be selling. We saw some of the semiconductors do the same. So like an AMD would be a good example of that. So we're seeing these clouds when they're taken out, that initial relief rally becomes a good selling opportunity.
Let me ask you something, Katie. As somebody, I've been watching you and your charts for, I don't know, probably close to a couple of decades now. And, you've always been, you haven't been shy about showing your indicators and showing your Ichimoku clouds and things like that, while, maybe other technicians over the years have kind of kept those sort of things to themselves and keep the charts a little bit cleaner. I know personally I have. I'm not as much of an indicator person as you are. But even the ones that I do, I kind of keep a little bit more to myself and clean up the charts. You've always like really been like, just you own it. Be like, yeah, these are the stochastics. This is what I'm looking at. So when I know you've had different roles over the years, but when you're talking to institutional investors and things like that, are you showing them all of these indicators? Are you cleaning up your charts to show them? Really curious about that.
I don't clean them up except usually the relative strength ratios. They get pretty messy when I lay over all the indicators, and I do want to stay true to, like, you don't want to get too many derivatives away from the actual price, right? So you're already sort of one derivative away with the ratio. So other than the ratios, we tend to keep it just as we see it. Sometimes we'll remove the DeMark indicators if they're not informational at that time. But we're very, I guess, open source in terms of our methodology. And even with our ETF, we were very full disclosure about the methodology that sort of serves as the basis for that, because we, feel like it's the value is really in the systematic approach to it, right? And that's what we can add value in doing for folks, right? We can approach it systematically in a way that they just don't have the capacity to do. So theoretically, everybody can look at all these charts themselves, but to have, some hand holding in terms of coming to like an investable takeaway, that's really the hard part. But the indicators we've developed over the years as sort of our methodology, we just kind of picked up some from our mentors, just like I'm sure you did as well. And I feel like we have a good combo here. It's in how you combine them that I think you have a good takeaway or otherwise. So we feel like we have a good combo. And if we're, on the wrong side of something, on the wrong side of the market or a security, it's usually because we're giving too much weight to an indicator. It's not the indicators that are failing us. It's us giving too much weight to one that shouldn't be weighted that way at that time. So we feel like we have a great way to sort of take out some of the guesswork.
No, I love that. And you're recognizing the way these things behave. Sometimes people are like, oh, technical analysis doesn't work. It's like, well, maybe your technical analysis didn't work, but that's not technical analysis's fault. Like, I don't know how to use a chainsaw.
That's a good way to
learn
put
how to
it.
use a
Yeah.
But like the fact that I can't use it doesn't mean it's not the chainsaw's fault. It's user error. I just suck at it, like.
And I think, JC, you have a phrase, I don't know if it's like price doesn't lie or something like this, where it's just price, right? And we have mathematical ways to interpret it. So technical analysis really never fails. The only instance in which that could be the case is like a small cap biotech stock that has an announcement.
But that going in, this is what you're playing with. You want to play with fire? You're going to get burned sometimes.
Yeah, like anything that's binary, or maybe it's like a takeover candidate, something like that. Well, then you're not applying the charts. But otherwise, it really is fair game. Anything that has, liquidity to it and the charts aren't super gappy generally lends itself very well to these indicators. I mean, think about with crypto, it's really, I still think it's the best way to understand the cryptocurrency market and to navigate it. And you really see it's remarkable how these cryptocurrencies, which are widely not understood, are adhering to support and resistance levels, right? So there's that same market dynamic. It's really fascinating.
It's the humans, Katie.
Yeah, the same
balance sheet.
And every bit of information out there, right, is coming down to buy or sell decision, so it manifests itself in price. So I'm on your side in that regard, obviously.
Listen, I've looked at a lot of charts over many years, and I can tell you that the same patterns that Edwards and McGee were talking about in the 1940s, you're seeing in the dog with hat and in the Harry Potter token. You're seeing them. I mean, you can't make this stuff up. Katie, back to TradFi. Can we throw up that crude oil chart? Energy stocks had some day yesterday with crude oil getting hit. Any thoughts on that divergence? Were energy stocks just up because stocks were up a lot, or?
It is pretty interesting. So we did see the drillers. I think it was Trump's "drill, baby, drill" comment. I don't know. So we did see. Oops, did I lose you? We did see a pretty good reaction from the equity market. Certainly, crude oil. Whenever something becomes really frustrating, it's probably a trading range and somewhat directionless. And that I would apply to crude oil right now. I mean, it's more range bound long term. Within that context, we have somewhat weak long-term momentum. You can see that just in the lower highs, but very good support for crude oil in the kind of like low to mid 60s range. So I do think there's a bit of a floor there. But in terms of the equities, I was looking at the S&P 500 Energy Index, and the relative performance has been awful. As you know, it's an underweight sector for us still. But in absolute terms, and with the help from yesterday's rebound, it did hold some cloud-based support on the weekly chart. So I do feel like there's a little bit of a staging ground for a bigger relief rally. And what's great about energy is it does give us some diversity, right, in our portfolios. It doesn't trade like the S&P 500. So if you're interested in those stocks for macro reasons or otherwise, you don't carry quite as much risk from the top-down perspective as some other sectors.
Can we finish with the dollar and yields? Because this one, I mean, they are dancing together, are they not?
Yeah, it's pretty wild. And the DeMark signals are what's most interesting here right now for yields and the dollar index. And with the relief rally, what I will say is that when you see such a strong, sharp up move, like a steep up move like this, it is more often counter trend, right? So we're looking for a pretty big retracement, and that's enhanced by what we're seeing in the DeMark indicators, which show signs of short-term exhaustion and have been super timely for both 10-year treasury yields and for the dollar index. So you see the cloud model there. We think the dollar index probably comes back into the cloud and maybe discovers support there. The equivalent for treasury yields would be sub 4% again before it actually establishes a higher low, perhaps against September's low, which was around 3.6. So we do think that yields are in a secular uptrend, but we don't think we're off to the races here long term.
So you think that the mess that the dollar and yields have been in over the last year likely persists?
Yeah, so we think it's a cyclical down move.
That's a technical term, Katie. Mess.
Yes, I use that myself. So cyclical down move, I think, has a hold on both. You just have to look at the monthly MACDs and you'll see it. We think that that's going to keep hold a little bit longer, but that in 2025, probably the earlier part of it, we will get that major low and then see them start to work their way out of it. So I just think it's going to take time. I think short term, it's pretty overdone now.
Katie, you've always been more of a MACD enthusiast than I have, but I got to tell you, the monthly MACD is the real deal, Holyfield.
Yeah, right? I love it. And you know what I've been using more is the MACD histogram on the monthly. Yeah. So watch like when that peaks, which it did for the NASDAQ 100 already, you know, it feels like that's a good indication of not necessarily like an outright sell signal, but okay, well, maybe we're getting into like a, you know, more range bound environment, that type of thing. So I'd always keep that one on my radar too, that the MACD histogram on the monthlies.
Last I looked, assets under management, well over $200 million on the ETF. Is that right?
That's right. Yeah, we had our sort of best quarter of performance relative to our category in Q3. We were number one in the category, which is U.S. tactical allocation. Since the ETF moves from sector spider ETFs, it has sort of a sector rotation element as its primary focus, but then manages risk through investments in short-term treasuries, long-term treasuries, and gold. That gold piece being pretty unique to an ETF wrapper. So so far, so good.
No IBIT?
No IBIT, no. So we're using, we're using 1 to 3 year treasuries. Arguably, it's a little bit boring, right? But I see our ETF, which is TACK, as a great sort of core holding around which, when we have these strong bull market environments, you can, play with the stuff that is more fun, right? Go and buy the Palantir.
Love it. Katie Stockton, this has been great. I love these conversations. Sorry I took all the time asking you my personal selfish questions.
No,
but
I love it, JC. It's all good.
you got to take advantage. So I will see you soon.
Sounds
Next time
great.
I'm in the city with a little powwow, I will let you know, as I always do.
Awesome. Look forward to it.
All right,
Take care.
adios. Katie Stockton, ladies and gentlemen.
Yeah, she's great.
Yeah, I've learned a lot from Katie over the years. I mean, Katie got her CMT before me, because I remember like first getting, showing up at like, CMT conferences and stuff like that, and Katie up there giving presentations. I mean, I've been watching Katie Stockton's charts for close to 20 years. Like, that is not she's great. She's great and consistent. She's got her process. She's great. And you know what else? She takes a lot of pride in her charts. She always says she takes too much time in making her charts pretty, but I respect that. I respect that. People don't take enough pride in their chart work. At the end of the day, to quote the great Howard Lindzen, it's chart art at the end of the day, is it not?
What's the saying? The packaging is as important as the product, right?
Yeah.
So if it looks ugly on the outside, people are less likely to
Dude, when you buy like one of these overpriced jewelry things for your wife from like David Yurman or whatever the hell, like the packaging is beautiful. Like, it's really, really nice.
Yep. All right, 9:33.
I got some rack at these jewelry people.
I don't know if John is stopping by, JC. We may or may not have Sean.
If not, that's okay too.
We have Sean coming in as well.
Yeah, bring him in.
Well, he's not here yet, but he'll hop in a few. I wanted to talk about just, some stocks that are moving today. We got a lot of movers today.
Yeah.
Talk about the AppLovin with Kenny. AppLovin is up like 37% this morning or something like that. Something insane on their report. Steve's favorite stock. Oh, now it's up 42%. Lyft, Steve, your favorite.
Yeah,
28% on their report.
Wow. Look at that. It's great.
What else do we have here? We have Dutch Brothers. Here, wait. I think I have a few of these charts. Give me 1 second. I have them floating around somewhere. Let me go dig them up. Yeah, here's the lift. So this obviously does not include this morning's trading, but huge day so far for them. Best day probably in quite a long time.
Can you throw up slide 2, please, Mr. Spencer Israel?
Is this a new slide 2?
This is a new slide 2.
It is a new slide 2. Okay.
Yeah. This is what's got my attention this morning, Mr. Steve Strazza.
Yeah.
This is a one CSI 300, Spencer. There you go. So this is the CSI 300. So this is the S&P 500 of China. And going into the election, I'm thinking to myself, listen, everybody just assumes that Trump winning this by a landslide, which it looked like, obviously it proved out to be true, but it looked like Trump was going to win by a landslide. And that would be theoretically terrible for China. But as we know, we had these major momentum thrusts in China over the last couple of months, which is not an indication of the end, more so the beginning. So I'm like, Trump wins, they knock it down. Let's see if they come in and buy him. Well, they're coming in and buy him. China has one more day of trading before this week is over. If they can stick this landing, it will be a new 52-week high for China.
Yeah.
Does that mean anything to you?
No, I like that theme. We were going to put a trade on China yesterday. Probably should have.
Well, I don't think it's too late. I mean, I personally wanted to see the action coming into China before we started to get aggressive personally.
I mean, I've been accumulating these bases in like Tencent and Baba and the big names, but we're going to get, freaky and go out on the risk curve a little bit here now.
All right. You're going to get freaky.
I don't know why would you wait? Like when you get a momentum thrust like that like for me, once the momentum thrust is like bang, bull market, I'm accumulating, buying weakness all day. So like I'm in. I'm thinking more like call options.
I'm not in as much as I'd like to be in, and I was waiting for the buyers to come in. I said it before the election, I said it after the election, and now I could say, hey, the buyers came in. I mean, we said it in the meeting yesterday.
See, I believe in breath thrusts. Maybe that's
I do too.
I believe in breath thrusts.
It was a momentum thrust, not a breath thrust, though, was it?
It was both.
It was both?
That day for sure. It was. We were thrusting across the board.
Trust the thrust. Do we have those T-shirts, or is that just a little too risque? Trust the thrust.
We saw
No.
We saw initiation thrusts in both terms of breadth and momentum, not just in China, but all of Southeast Asia this summer. How about that?
Yeah, man, that chart, this is really something. You know, they ripped them, they pulled it back. This is on pace for a new 52-week high. Very impressive. And everybody thinks that Trump being president is bad for China. Love that.
Somebody mentioned Grab in the chat today. I was just looking at Grab. That base is complete. New uptrend underway.
Grab, the old Uber of Southeast Asia.
Yeah, it's a good one. It really is. I love this chart too.
Yeah, this looks fantastic. I like the trade from yesterday on China, right? You know, so I'm participating, not to the degree you have a bunch of individual stocks. I'm just in the ETF. I actually don't have any Chinese stocks. I don't have any Chinese stocks.
Yeah.
But that's going to change. That's going to change. Sean is the one with the trade idea yesterday. Is he here?
Is Sean here? I don't believe he's here yet. Let's send him a message in Slack. Let's tell him to come in.
Tell him to come in because this was his call out. I love the trade, but this was his call out to get exposure. We won't go over the details of the trade, but nevertheless, for $3, you can have exposure to China from the long side going out to January of 2026. And the strikes are not that far from current levels. So, you know, I really, really like that trade a lot.
All right. Should we hear what he has to say?
Please.
All right.
Johnny baby.
What's happening? My ears were burning. I had to pop in.
Throw up the China chart. You know, when I think Sean, I mean, I just think Chinese, you know.
Yeah, I'm the biggest China bull around. Everyone knows that. That's my bag.
Yeah. Do they have Chinese people in Buffalo or no?
Yes. Buffalo's a very diverse population, JC.
Is it because of its proximity to Toronto? Or just is?
I don't know if that's the reason, but
Can't hurt.
No, I mean, look, I went to an elementary school that had a mix of just about everybody. I think the one thing we didn't have was Cubans. That would have been weird.
Yeah, because why would a Cuban go to Buffalo?
No, there's no reason for a Cuban.
Cubans are never going to be. Cubans couldn't be caught dead in Buffalo. Are you kidding me? Cubans don't go up that high. Crazy.
Right.
So this chart, Sean, I really like it. Obviously, we don't have to get into the details of the trade, but essentially having long exposure, well-defined risk, taking you out to January of 26, cheap. It's a nice call out. I'm in.
Yeah. We were talking yesterday about it. I brought a trade idea to the table, and I love what you said once I shared it. You said, if we get rotation here, this trade can make our year. Nice alliteration there too, which was nice.
You like that?
Which you weren't trying for, but yeah, I mean, look, it's you hit on it just a few moments ago when you were saying that, you know, the narrative was if Trump wins, China should probably get killed, right? Well, the market has its own ideas, and that's why we like to follow price, and that's why only price pays. And the market was telling a different story. And boy, you know, China had a big breakout. What was it, 6-8 weeks ago? I forget exactly when. Had a big breakout, and then it's come back a little bit. But the way it's been consolidating, I'm talking about the big caps in general, the way it's been consolidating, I mean, that is incredibly bullish. And now we're seeing follow through, which doesn't surprise us at all. And so we're positioned for that. And yeah, I mean, we got some time for this trade to work out. You and I are playing it a little differently, but the great news is we can both win if we get it right. And
yeah, but you're playing it more conservatively than me. For me, I'm YOLOing. So like, for me, this could make my year. I don't want to risk losing out on upside just to lower my cost basis. My cost basis is shit. It's $3.
No, I get it. And I would push back. I'm not being more conservative. I think I'm just being more tactful. I'm trying to generate some extra income. So actually, in a way, JC, I'm actually being more aggressive.
Yeah, depends how you look at it. I'm still not going to do it.
I hear you.
I respect what you're doing, but I'm not going to do that. I'm just going to buy it, set it, and forget it, right? Like the old rotisserie. What's the rotisserie thing? Set it and forget it, right?
No, look, it makes sense. And there's nothing wrong with that, JC. I mean, a guy like me who typically will have anywhere from 20 to 30 positions on, there's value and there's beauty in having positions you could put on and just forget about them, right? I mean, obviously you might have your stop levels and that'll be managed, but you know, the less you have to babysit each individual position, the better. So nothing wrong with what you're doing. I got no problem with that.
All right. Well, as long as Sean thinks it's okay, how bad could it be?
We had a great conversation with Stephen Place yesterday, taping the podcast, and it was actually really cool hearing how we always talk about how the longer you're a trader, an analyst, or technician, you simplify. The process gets simpler and simpler. And I don't know, correct me if I'm wrong, Sean, but he has really simplified from doing a lot and selling a lot of premium to just more or less making directional bets now. Seems like he kind of found that to be the way for him.
Yeah, well, you know, he's a perfect example of a trader who, you know, uses his own data, his own experiences to use that to make better decisions going forward, right? So he's analyzed all his past trades, looked at where he made money and where he could have made more money, and said, you know what, maybe I should shift my strategy a little bit. So that's great, and we should all be doing that. Hey, one thing I want to talk about real quick. Shout out to our boy JC. You guys were talking about this the other day. I was not on the show. But when JC was taking a quick little spot poll of, you know, is VIX going to be higher? Is VIX going to be lower coming out of the election? Everyone was calling for a higher VIX. And when JC was calling for a lower VIX, I was over here nodding my head. I'm like, JC's right. He's right. And good call, my man.
Who were we on? It was Sohn, right? It was Todd Sohn?
I think it was Todd Sohn, yeah.
All these guys are talking about higher volatility. I'm like, dude, fade that all day.
Mean reversion wins again in volatility. It's almost undefeated. It's not undefeated, but it feels like it's undefeated sometimes. Well done on that.
You know how like the memes, like the memes, and by the way, regardless of which side of the aisle you're on, it is hilarious watching these crazy libs like losing their shit. Right. So like I see the volatility collapsing and like libs losing their shit like at the same time, like unwinding. Like it really is. I mean, it really is a thing of beauty.
Yeah. Well, hey, the nice thing about volatility coming down and the market having a clear direction now, right? We've had a reaction. I mean, we do have the FOMC later today, which could throw a wrinkle in things. But at least for now, the nice thing is that a lot of charts now have declared their next move. And at least for me, I'm looking through all my open positions today, and we'll be talking about it in my jam session in a couple hours. I got a lot of positions that I'm adjusting stops in now because now we've got very clear levels to raise stops on some of our bullish positions. We even have very clear levels to lower our stops in some of our bearish positions. I'm looking at Hershey right now. Hershey getting killed today. That's a bearish position we have on the books. It's going really well. So it's nice now that we got
consumer staples underperforming in a bull market. Almost like it makes sense.
Right. So it's great when volatility comes in, then chart levels reveal themselves that you can lean against more aggressively. And that's what we're doing today. And we'll cover that in the jam session later. Raising a lot of stops, in some cases, locking in profits, in other cases, just, minimizing our risk as best we can. But now we're starting to get some clarity, and I like that.
Yeah, it's great. Fantastic. What else? Strazza, any thoughts out there?
Yeah, I could share a chart. Throw up the microcaps chart for me, please. I wanted to find what I thought was the one chart to kind of summarize the market reaction. And this is what I landed on. So the market reaction yesterday, right? The fireworks. You could have picked regional banks. You could have picked a lot of things. IJR would have been a good one. Breakaway gap to new all-time highs in the S&P 600. But I thought this was more appropriate because the biggest theme to me is risk. It's risk appetite. It's the groups that weren't participating as much. It's not the mega cap techs and all the ones that have been working for years now, right? Yesterday's reaction to me was, hey, everybody's joining the party now. And what better way to represent or illustrate that theme than the riskiest stock market index in the United States of America, right? In terms of the size factor, this is the Russell Microcap Index, ticker symbol IWC. And if you just read the chart from left to right, we went through a prolonged bear market coming off, textbook topping formation back in 2021 into 2022, into this super, super prolonged basing period, right, where we printed this rounding bottom formation that seemed like it might last forever. And then yesterday, we're coiled up at the upper bounds of this, base breakout level here, I see this on the right side of the chart, and we break away, gap it, and complete that pattern. Yesterday marked the completion of a textbook trend reversal, right? So the path of least resistance is now higher for the riskiest stocks in the market. So your biotechs, your regional banks, your community banks, your ARCI stocks, right? Your really, really speculative growth stuff. I think all of that is joining the party now. And that's really where the alpha is going to be, I think, into the remainder of this bull market, in my opinion. I think there's a massive catch up that needs to go on from some of these groups to the market leaders over the coming quarters. You like it?
I do like it. We've seen this area of the market struggle for so long, right? We saw the S&P breaking out, we saw the Qs breaking out, and every time we were always like, well, what's going on with the Russell? What's going on with these small caps? And that was always
bigger
kind
rotation.
of a question
This
mark.
is part of the small. I mean, it's just an extension of that story, right?
What story?
Rotation into smalls.
I didn't
It's
know.
called the January effect.
I didn't know we were talking about that story. You have to fill me in.
We're not. I'm telling you.
Oh,
Story. So the January effect, maybe check your annual Stock Traders Almanac. The January effect used to go into play in January, hence the name January effect. And as the years have gone on and the market has evolved, that January effect has transitioned into December, November, maybe even into October, where you're getting that rotation into small. So this breakout in the micros, isn't this just part of the old January effect?
I
So
guess.
they're front running the January effect. Is that what you're saying?
Well, it's not so much front running as it is the dynamics have changed. There's a lot of like end of October fun stuff. Like there's a few reasons that Jeff Hirsch has explained to me why he thinks it's changed, but it doesn't matter why it's changed.
But you're taking low level or what we consider ancillary market data, seasonality, right? And then putting it on a pedestal above the price data. I'm just talking about the price action.
I couldn't agree more. But what I'm telling you is that the new all-time highs in the small cap index,
okay,
micros breaking out, makes perfect sense within a seasonal perspective because that's precisely what should be happening.
No, the way I look at it is, okay, microcaps are breaking out. That's what price is doing. Oh, seasonality, it's confirming that. That's nice. It's seasonality supportive of this move. But if price isn't doing it, I'm not like, oh, seasonality says I should be buying microcaps. I'm not buying microcaps because of seasonality.
I couldn't agree more.
I'm happy that it's supporting what I'm seeing in the price chart.
No arguments here. All I'm saying is that it's perfectly normal to the point where if that was not happening, that would be weird.
I don't know.
Right?
Didn't work too well the last 2 years.
So I know we're not.
Oh, small caps didn't rip in the fourth quarter last year?
They had a good December, but
were you trading the same market as me?
It's the January effect, I believe.
Yes, the January effect no longer starts in January. I prefaced with that.
That's not confusing.
All right, listen. Let's
talk
talk
because
about
the market's not confusing in general.
Let's talk about stuff that's on people's mind today. All right. I know none of us here are Fed whisperers, but we like to play. We like to pretend sometimes. Strazza and I were kind of laughing in Slack yesterday. Do we think Pow is going to come in today and just attempt to throw some cold water on this hot rally? What do you guys think?
He's going to give it the pow.
I don't know. You think he's going to suck up to the old Orange Julius? Give the orange man what he wants? What do you guys think?
I was talking to Pat yesterday, right? And let's not forget, right before COVID, before the pandemic, there was this time where Donald Trump was just obnoxious, harassing Jerome Powell and the Fed, right? Remember that? We were hiking rates up.
Donald Trump was being obnoxious? I can't believe
and
it.
Trump was giving him a time about it. So, I get it. We're in a different place now in terms of interest rates, but that happened during the
So has Jay Powell been on his speed dial this morning, you think? I'll bet they've talked.
Trump wants a good economy, and he's not dumb. He knows that moving in one direction probably helps and the other direction probably hurts. So
if we don't get a cut today, it would be very surprising.
No, you're going to get a cut today.
Yeah.
Getting a cut today. Yeah.
And
25
so,
basis points.
Yep.
which also we've talked about a little bit over the last few days. I find it interesting that while the Fed has been cutting rates, we've seen mortgage rates rising.
I know.
I mean, what is that telling us? That seems confusing to me as an amateur economist.
Demand for housing.
Don't ever call yourself an economist ever again. We can't be friends if that's the
I
case.
said amateur.
No.
Amateur
I don't want to
economist.
hear that ever again. You and me are friends, and I want that to stay that way. And if this economist business seeps into this,
It did hurt my
we're no
ears
longer
when I
friends.
said it. I'm with you. It did hurt my ears.
Oh,
You
you're better
know,
than that, Sean.
I think we talk about this great bull market for stocks that's going on here. Is there a better bull market than housing? Absolutely Teflon. For what, 4 years now?
Yeah, but I think that where
depends
you
which side of the
live
market
and
you're
where I
on.
live, and where Sean lives and where
No.
Spencer lives is one
Prices are
thing.
going up.
I don't think it's like that the rest of the country, though.
What do you mean?
The whole country is ripping the way my real estate and your real estate has, and around Sean and around.
I mean,
Spencer.
to some extent, it's geographically sensitive, but by and large, housing prices haven't really stopped going up. I mean, they've petered a little bit, but they're
I mean,
still
my house
going up.
is literally worth probably double what I paid for it 4 years ago.
I'm still on a multi-bagger.
But I'm an hour and change west of Manhattan, hour north of Philly. So like there's something there.
For now. People going south, baby.
I guess. Go. Knock yourselves out. Get out of here. There's too many people are up here anyway.
It's
I
a
think we
mega
need to
trend.
be. I think
It's
we
not
need to be
no,
investing in
it's
real
15
estate
years.
in the prairies in Canada, right? Climate change, perhaps. Prairie land north of Minnesota.
Maybe.
Michigan would be.
Housing's the place to be. I'm
prime
looking
real
at these
estate.
charts like Redfin, Zillow Group, even the mortgagers. They came in a lot. These are probably all buys. You look at the home builders.
Have you seen Zillow this morning, Steve? Zillow's up
Zillow's up
20% today.
last I checked.
I love this housing theme. Like I think you go all in on the housing theme right now. Look at the retest in Lowe's. Home Depot still hasn't broken out. How is that? JC's talking about Amazon, Walmart, Costco. Like Home Depot's on that list for me. Like
Home builders, Steve, rough go of it.
yeah, but like I think you buy that weakness.
Home
all day.
Depot,
You zoom out and-
third largest component of the consumer discretionary sector, Mr. Strazza.
Builder First Source, Trex. Like I want to own all these names.
Spencer, you mentioned Michigan. I'll do some boots on the ground research for you. I'll be there in 2 weeks. I'll look around. I'll be in the Ann Arbor area.
No, well, everyone always says like if there's one place to move is in a world where like climate change destroys the world. It's Michigan because they got all the fresh water all around it, fresh water, right? So
I got to tell you, we had a really cool season over in Napa for our grapes. So this global warming thing didn't hit Napa this year. It was the opposite. It's cool season.
The grapes like it cool.
The grapes like the diurnal swings. So it's not so much cool versus hot as it is hot during the day, cool at night. Hot during the day, cool at night.
We got our first snow of the season yesterday here where I live.
Wow.
what?
Early.
Yeah,
It was 80 degrees where I live. You got snow?
yeah, we got snow
He's
yesterday.
in Colorado and you're in New Jersey.
Yeah, it's
So there's
everything's
that.
white. I look out my window right now. Everything's white.
Damn.
I own way too many stocks, Bubba Dub. It's true.
Yeah.
I showed Alfonso the other day. He almost had a heart attack. I shared my screen and I'm just scrolling. But that's it. I build baskets. I'm not
All right.
an ETF guy.
Hit it, Mr. Spencer.
Wait, I just want to. Yeah, I'm looking at APP2, Rachel, which is up almost 50% today. What the hell did they say? Revenue was up 39% year over year. What else do they say? Free cash flow up 182% year over year. They did more buybacks. They gave good guidance. Monthly active payers actually declined. But revenue, I don't know, man. 50% increase in one day is a lot. All right, let's do some recess and get out of here.
I just want to say an early goodbye to everybody. I had all 3 kids sick, wife sick, everybody. The whole house has been sick except me. I haven't been sick in like 6 months.
Oh, it's coming.
I'm so due.
You're gonna have the worst weekend.
If I disappear for a few days, just want to say ahead of time, sorry, but it ain't looking good. I hope I get through it. My wife had strep throat a couple months ago, and I didn't get anything. So we'll see, man.
I don't know.
Yeah, I know what that's like, my man. Good luck to you. I see Mary lurking in the chat talking about Michigan prices being high. Speaking of boys, me and Mary in 2 weeks when I'm in Michigan. Mary and I are both taking our 10-year-old boys to the Michigan football game. It's gonna be great.
Sick.
Can't wait.
Against who?
Northwestern.
Nah, who cares?
Northwestern. Got it. All right.
Awesome. That's going to be that. I'm telling you, I've never been to like the South before for like a college football game, but Ann Arbor on a fall Saturday, man, nothing like that. Beautiful.
Oh yeah. When I lived in Chicago, I made a few treks out to Ann Arbor,
Yep.
so I know what I'm in for. It's fun. I love going there.
Awesome.
Dude, I'm dying to go there, man.
It's fun. The only bummer is that there's not a hockey game that weekend too, because the real doubleheader, you got to do a hockey Saturday night, a football Saturday and a hockey Saturday night in Ann Arbor. It's a really great time.
Spoken like a true Canadian.
The Yost Arena in Ann Arbor is so underrated. It's such a great hockey experience.
The Yost Arena, is that Michigan College, like university?
It's called the Yost Arena, and you know, like some of you guys who know a little bit about hockey, you hear Canadians talk about, they call their home rink the home barn, right? They say barn. Well, the Yost Arena actually looks like a barn. It's awesome. It's got the peaked roof, and the fans are really into the games, and they have cheers for every single weird game situation. It's an experience.
And they're always like in the Frozen Four, right?
Yeah, they're always up there.
It's always top, like Michigan, 10. Like North Dakota. Right?
Minnesota
Denver University here in Colorado. They won the national championship last year.
The University of Miami never in that Frozen Four. Can you believe that?
Wait, real fast, quick PSA. We're going live this afternoon for the Fed, right?
Sure.
You want to go live like 2:30?
Unless I'm dead.
All right. And also PSA for Strazza. Next month, Steve, you'll be able to take an Amtrak train to Chicago from Miami.
What?
Yeah, it'll only take like a week.
Doesn't really
that doesn't sound fun to you? Okay.
Well,
no.
The problem, Spencer, is there's no train from Miami to Key West.
That's right.
No, there was not. This is true.
Henry Flagler.
Dude,
Flagler.
I need Joby. I need Archer Aviation. I need these little Jetson-looking helicopter things to figure this out.
I thought you might. You seemed to like Chicago last month, so.
I love Chicago, but I'm not driving to Miami to take a train to Chicago.
Yeah, that'd be dumb, Spencer. They got airplanes. What year is this, bro?
Trains are fun. Trains are fun. I'm
For the record, I
trains.
love trains, but that's aggressive, Spencer.
It might be faster to take. It might be faster to take a pontoon boat from Key West up the Gulf and up the Mississippi River.
It might be faster to walk.
No, but really, I know that you do love trains, JC, and I think that's crazy because I grew up taking the train and then taking the train to work at like 6:30 in the morning every day. So
I like trains too.
Well, no, those trains suck. Trains suck.
I love trains so much. My wife now, when we first started dating, she would stand me up for dates all the time. Like she just had no interest in me whatsoever. Because one could argue she has less interest now, but that's another story. She stands me up for a date. I was working on 34th and Park at the time, so only a couple blocks from the train station. She's standing me up for a date, and she's like, "I'm not going in the city. You got to come here." I was like, "All right, I'll just take the train." She didn't know how much I love trains, so because of my love for trains, I am a happily married man with 3 beautiful children.
I like trains too.
I'm more of a car guy, so I'm excited for the road trip tomorrow. It's going to be about like 10 hours. So if anybody has advice for where we should stop along the way.
Where are you going?
We're driving all the way to Atlanta to meet Weitzel for the Georgia Tech game. So we figured we'd make a whole day Florida.
Whatever you do, avoid Tallahassee and Gainesville, two of the worst places on earth. Tallahassee and Gainesville make Newark, New Jersey look like a paradise.
No, I've never been there and don't plan.
Well, I don't think Strazza is going to veer too far from I-95, so there's no worry of that.
But when I drive through the middle,
people.
But they have the best boiled peanuts in the world in the middle of Florida.
All right, that's not weird.
Wouldn't know.
Boiled peanuts from Ocala, blow your mind, dude. So good. So good. You got to get
Ocala, Florida. One of my good high school buddies lives there. It is someplace there.
All right. Sean has the option jam session at noon. We're doing Chart Request live at 1, and we'll go live at like 2:30 if JC is alive for the Fed thing and talk about the market's reaction to that. And that's the plan. So thanks, Katie Stockton, for hanging out. Thanks, Sean, for hanging out. Thanks, Chad, for hanging out. We appreciate you guys. Go make some money. All right, go do that
responsibly,
and that as well.
Adios.